Hello everyone, this is Juan Sarmiento and today is Friday, May the 1st. Okay folks, first let's go through what we did today. We closed two positions, one on Qualcomm and the other in NTAP, and I enter a bearish trade on GIS, General Mills. Let's analyze that. Yeah, it did fill, as you can see here. All right, we even made a little money today. Okay, let's go to the monitor tab now and see by clicking here on the P&L, we can see the ones that have 100% return or more. And we have Palo Alto Networks. Let's see what that is. Take a look at the chart quickly. PANW, Palo Alto Networks. Okay, let's look at the trade. And it is a bullish trade, but it is one of those diagonals and it's right at the top of the cone. So anything that happens from here could give us further gains if the stock slowly goes down to the cone. I'm not going to do anything, but I could change this into a bearish trade if I so wished. And we can wait a couple of days. Yes, I'm bearish, but I think this trade will capture that and we have the opportunity to get out of the position. Okay, so I'm going to leave that alone. The other one is Microsoft, and we have 102% return on that for the year. 25 bucks, not much. Okay, let's take a look. MSFT. And this is mixed. Let's take a look at the trade, and in this case it's a bearish trade, and we are here at the edge of the diagonal, but I see here that May 20 puts short are going to expire worthless, so I end up with what is amounts to a lottery ticket. It's a put, but it's way out of the money, so I'm going to leave it alone. Who knows, maybe the stock goes down to 145 and then I make another $700. Whatever, let's leave it alone. Okay, I have 1, 2, 3, 4, 5, 6, 7, 8, 9 trades that I want to enter, and they are all bearish. Not surprising. That's, at least I'm consistent with my analysis. No, but in reality, I use a certain pattern that gets triggered, okay? And I have no trigger for bullish trades whatsoever. So let's take a look. First is Yum, in no particular order, by the way. I am entering a diagonal. I'm risking $318 to make a maximum here on the cone of 318. 322. Okay, let me set the slices here to the break-even point. I don't know why I didn't do this. Yeah, good. Probability of success 58%. Looks great. Okay, so because I'm risking only 300 and some odd dollars, is less than 1% of my account. Sounds good. So let's do it. Confirm and send. Next is WHR. Oh yeah, by the way, this Yum, I forgot to mention that the Yum was a trade that failed, so I have to modify it. Okay, so just so you know that the trade I entered yesterday did not fill, expired, the order that is. So I modified the trade quite a bit. I lowered the strike prices by 5 and more of a credit there, but the expirations are the same, as you can see. Okay, let's move on to WHR. And here I have a diagonal. Let's take a look at the chart. Yeah, I'm bearish on it. And here's my trade. I'm risking 269 to make 337. Sounds good. I'm not saying that's what I'm going to make. I'm saying that this is the maximum I could possibly make if I close my position on expiration day and it felt right at $105. In that case, I would make $341.58. Okay, that's what it means. And I am buying the 110 call and selling the 105 calls because the 105 calls is more valuable and the volatility is higher. It turns out to be a good opportunity, and I'm risking, as I said, less than 1% of my account at $269. So let's do that. Confirm and send, and that's my second trade. Then Tesla. On Tesla, I have to enter I can't enter a diagonal. It just wouldn't work. So I'm entering a vertical. Here you have it. Okay, so I am buying calls at 105 and I'm selling a call at 700. 705 is the long, 700 is the short, and my cost is $247 to make 253. And the volatility is pretty high, as you can see. So let's do that. Next is Cree, C-R-E-E. And in this case, it's another diagonal. And the expiration of the short is June 5th. And let's set the slices to the break-even point. And let's take a quick look at the chart. I'm definitely bearish on it. And that's pretty good. Okay, so I'm buying the 40 calls and selling the 38 calls. Look at the different, obviously it's a different expiration, different strike prices, and we have 3 lots. Next is COF. Another diagonal. Let's set the slices here. And June 12th. Okay, you by now have figured out that I like the diagonals because I can transform them. If the stock goes way up, it's okay. Or way down in this case, it's okay. I wouldn't make as much, but if there is a rebound, I can capture some money on the way up as well. It has many features that I like. Okay, let's set that off. In this case, I'm risking $340 to make a maximum of 363. And the diagonals can be switched around to make them bullish when they're bearish. Next is UNP, another diagonal. And in this case, I'm risking 323 to make 312. And here is the strike prices. This is a put diagonal, so I'm buying the higher strike price and selling the lower strike price. And obviously the short is closer to to us in date. It's going to expire sooner than the long. Okay. Notice the volatility as well, the difference between the two legs of this trade. That was UNP. I have three more, NXPI and XPI. Another diagonal, risking 275 to make 320 something. Let's see, the expiration here should be June 12th. That looks good too. I'm risking, yeah, and notice the volatility is higher in the shorter leg, and the shorter leg is closer to expiration. Twitter, TWTR. And here I'm having a vertical, risking 280 to make 320. And this expire, both legs expire in June the 19th. And as you can see, the short has a higher implied volatility. I'm selling the 26 calls and buying the 29 calls. Good. Confirm and send. And that was Twitter, and the last one is ADSK. Another diagonal, and here let's set the slices to the break-even point, 557.87%. That sounds good. I'm risking 359, which is less than 1% of my account, to make 427. Sounds good. I'm buying the 175 call, June expiration, June 19th expiration, and my short expires sooner, and it's 170 call expiring on June the 12th. In this case, the volatility is about the same, a little slightly higher on the long, but that doesn't seem to be affecting too much the configuration of my trade, and I'm risking 360 to make 400, so it looks good anyway. So let's do it. Okay, and that's all I have for today. There is a whole lot of trades here. They're almost exclusively bearish. The one bullish that I have feels more like a bearish trade. Okay, but that's what I have. Okay, we'll see if I'm right or wrong. Okay, I think I'm right, so I have to go with how I think I am. And I have, once again, I have chosen these trades for very specific reasons, for a very specific configuration, and I have a thinkorswim scan to pick those up for me, and then I go through a whole list and pick those that look good to trade. And I have a scan for bullish trades and a scan for bearish trades, and I just trade them as they come to me, and I don't really look for one specific configuration. I just, as they come to me, I examine them and I individually see if they represent good opportunities, and that's where I enter them. So I hope you like it, and we'll see you soon. Thank you very much. Bye-bye. Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much. Don't forget to visit www.putgoldgenie.com. Then go and subscribe. You could simply subscribe as a visitor. It is free, and you would have access to several videos of interest for traders. You would be directed to this registration page. It is free. Once you have subscribed as a visitor, feel free to go to the tutorials and select the free videos. These are videos of general interest for all traders. Thank you very much.